Founders Floor, a co-working accelerator for startups.
I try to make it short. I used to be, for many, many years in big companies. I used to be Chief Technology Officer, Chief Marketing Officer for Infineon Technologies. Then I was 5 years with Intel, and then I thought I want to do something else, but not sitting in big meetings and pushing a rope. And so I retired. And in my retirement, I then became a board member. So I'm independent board member, either on advisory or on board of directors. And then people dragged me into the startup scene. So a friend brought me to the Band of Angels and the Sentinel Angels, and I joined both of them. So as you are going to represent the band, so I'm the Sentinel guy tonight. And that's pretty much what I do. So I also work over there at the ABC Accelerator, some Unix startups, and in Slovenia. Last week I went to Riga for the in one of the Baltic capitals and looked at their startups. So yeah, it's so exciting. I could rattle on forever, but I stop now.
Good, thanks, Herman.
Hi, I'm Wade Luders. I am a former FBI agent turned angel investor. Pretty typical path. What more is there? I left the FBI to start a business. I'd always wanted to start a business. My dad ran a business, so I thought, hey, this is a great thing to do. And I went to an accelerator, Adeo Resi's Founder Institute. Fantastic experience. Started a number of companies out of there, all of which failed quickly. I eventually did get one that was successful, a senior care business that I ran for a number of years. Unfortunately, it was not for me. I did not like it. Employees are a pain, especially lots of them. So I decided I'd do some real estate work, because real estate I can do by myself, and angel investing, because it's great to be involved with startups. So that's kind of how I got here. I've been doing angel investing for about a year. I'm relatively new. I've invested in about 14 companies, and I work with the Band of Angels because they have a fantastic group of smart people who can guide me, as well as introduce me to good companies like yours.
Good. You know, Band of Angels, Sentinel Angels, very active organization. So you guys do a lot of investments throughout absolutely the years, and even recently. Maybe do you have a couple of the companies that you find to be very interesting, whether you've invested through the band or maybe individually yourself, that maybe you could talk about that might be of interest to you right now? I don't know, Herman, if you have anything that's very interesting.
My most recent investment is a company called Gravity. Mm-hmm. They are an AI CRM for fundraisers. I am a bit of a sucker for a software company that targets a niche that I think they can win, that has technology that can expand and rule the world. So that's the kind of model that this company puts forth. They make some self-writing emails, some cool CRM products, very focused on a very niche, think colleges and universities and hospitals fundraising market. And I think that, again, it's an area that can win. So that's kind of what drew me to them. I see a lot of stuff, but for me, like I said, I'm a sucker for software that targets a niche that can grow.
Yeah. Herman, you have anything interesting recently?
Usually I give me a budget at the beginning of the year, and then I have to stop investing when that budget is taken. I'm already running pretty much out of budget now. Yes, I did some investments. I invested in Keto. That is a larger fund. I invested in Fabric number 3. It's also an acceleration and a fund. I invested into Geo Semiconductors up the road here in their own C. And what else did I invest in? I invested in a healthcare company and in Connected Signals. I think I'm pretty much running out of money for this year.
That's good. You guys probably see quite a few startups throughout the year, almost as many pitch decks throughout the year, and then after a while, you start to see some patterns, some characteristics in founders, of those founders that are successful, you start to see some characteristics that maybe have a propensity to make them successful. What do you see in those founders that you see time and time again in the successful ones, or what do you like to see in those founders that make them help to be a success? Because that's one of the things with founders. They're trying to figure out, at the end of the day, there's a core group of things that you just kind of see over and over again. So,
in a way, yes. On the other hand, we cannot go and bake the founders in or have them like pretzels coming off the line. I think a common pattern, though, is a stand-up mentality. So again and again and again, starting a company, raising money again and again, it comes with a lot of frustration as well. Nothing goes as easy as you think. And then you are on your own. I used to work for many years in big companies. I had a legal department, I had a finance department, and whatever I needed, I could just call on expertise much deeper than I ever had and educate me. If you run a small company and a startup, you don't have that. So it means you have to be very versatile in what you do, multi-skilled in many areas, but never ever give up. That is, I think, the fundamental thing. So never ever give up would mean, even though you recognize this idea wasn't actually as good as I thought, yes, there is a small likelihood that you are on the wrong path. So that means, yes, you have to have a little bit of a skill, maybe one out of 1,000, that you know when to pull the parachute and just say, call it a day. It's not going to work, period. I do something new. But until then, you fly this thing, and you fly it 24/7, period. And I think that is the most important skill.
Yeah, I completely second persistence. If you could sort of way to quantify it, let me know. I'd like to find a way. For me, I mean, there's so many qualities, but one that I think is necessary in a CEO is a salesmanship a little bit. And that's a tough one, because I don't want to be sold. I don't want to necessarily be the ultimate salesperson, but I need to find somebody who can take this idea and sell me and then sell future investors, because that's what we're investing in, is someone who's going to be able to sell the angel round and then also be able to stand in front of a much bigger, much badder VC firm and get a Series A. So there needs to be that professionalism, that ability to do that. And I look for that, we've always said, but it's all about the founders. It really is. We see so many pitches that are meaningless until you see the founder. The other thing I would add is domain expertise and knowledge of the industry. There's a tendency sometimes to get so involved in your invention that you get blinded to what else is going on in the industry, and we see that a lot. It's completely understandable. I know firsthand how that happens, but to the founder that is able to identify and tell us about the competition, tell us about the activity in the space, tell us about recent acquisitions, that's awesome. So.
Yeah, totally agree on that. A lot of the founders in the audience, are fundraising now, or they will be in the near future, and many times they're first-time founders, and so they're learning as they go. At the end of the day, they're trying to figure out, how do I reach out to investors like yourself and your colleagues? How do I engage with them in a meaningful way to be able to get a sit-down meeting? So, how do you guys like to be engaged with, or what's a successful pattern? Is it literally a cold email, something that you guys would reply to, or does it need to be warm introductions, or how do you guys like to be engaged with?
Cold emails are tough, but I will say it's a two-way street. As angel investors, we're trying to get in front of you. Our job is to try and find the founders. Your job is to try and find the investors. It should be easier, but it's not. That's why I joined and worked closely with a group, because it makes it easier to find than if I were on my own. It's tough. I'm not sure there's a magic pill, magic bullet to solve it, other than, like I say, cold emails are really tough. LinkedIn, InMail, that's tough. I've heard maybe if you send a video along, that helps. I agree, helps a little bit, but the best way would be, and obviously, a warm introduction, or find a way to present in front of a few groups. I don't think it's that hard. I think that there's a lot of groups that you can get in front of. You might not get funding, but you'll get exposure, and then you'll get from there, hey, it's not for me, but check this out. Or a lot of times it's it's not for me today, but let's circle back in a few months, and things happen. It's you think long term.
Yes, I would agree. Cold emails are usually not working, at least not with me. And the LinkedIn thing usually also does not work. And I wonder then on how that actually comes. So I think that is pretty much wasted time. Going through angels, that can work. There are more people, and usually in the band or in the center, usually 50 to 150 people listen to that pitch. So the likelihood that you find 5 guys that like your idea and put some money on it is actually fairly high. On why do I work with this? For the same reason. More people see more, and more people bring in more leads. And we have to understand the best deals are usually done in closed circuits. So that means the likelihood that a cold call or whatsoever would be that super unicorn deal is absolutely minimal, absolute minimal. In an angel group, it's already higher. The inroads are established, the connections are established, many people know them, and so that means everybody is pretty much keen on presenting in the band of angels, and come to the Sentinel angels, and usually if one is there, a few are like me in the other one as well, and bring it over there, and then you already have a lot of connections, and that works much better, and you get a lot of feedback. That's good for you, and those people that throw in money, they think of you. Be happy if they don't call you every day and want to know your status and how you are doing. It's a kind of a balance, but at least they think of you, and if they find new leads or whatsoever, you have more people just watching you while you go.
Yeah, and I'll add that at the end of the day, I mean, we need a filtration process to some degree. I mean, there's just too much volume coming in to be able to go and look at every pitch deck. And so that's one of the reasons why we use our network as part of that filtration process. If it's referred to from it's a close colleague, I know that they've vetted that to some degree, and it's worth our time, because there's just only so much time in a day to be able to look at stuff. And so you really, if you're trying to invest in really good startup companies, you got to focus on the ones that you think has highest propensity to be able to be investable with. So that's that's a difficult process. But going through that fundraising process, especially for the first time, helping to set some expectations a little bit, maybe for these founders. How much time do they need to think about in regards to from the time that they start pitching investors to the time that money is wired in the bank? And how many total investors do you think they need to kind of maybe go through before they get that core group that are end up going to be investing in their pre-seed round or seed or even Series A at that point? I know they're different, but do you mind maybe giving your 2 cents on what your thoughts are with that?
Yeah, you want to know whether it's a 10-to-1 kiss frog experience or whatsoever. Yeah, you have to kiss a number of frogs until you find a prince. Unless you are this one super unicorn where everybody jumps on, wants to put money on. So assume that you have to do that. Assume maybe if you are the CEO of this thing, that pretty much you will be raising money all the time. So it does not stop. So once you have the last money in your account, you already have to think about, what do I do next time? What do I do? So get acquainted to that situation. If you cannot, maybe it is a wise step that you find somebody whom you resonate with and let that person be the CEO and take a step back and become the CTO or whatsoever, and have somebody else doing it. If you don't like it, don't try it. Then maybe find a friend and have that friend doing it, and you do what you like and work on the technology, work on the idea, and have somebody else going and polishing the other people's stores and look for the money.
Yeah, I agree. And as I mentioned before, I'm a flawed founder, but the job of the CEO is to fundraise a large portion of it. So if it's something you're not comfortable with, like he said, find someone who is, because I think it's important. It's that salesmanship that has to happen. In terms of how much time, I've seen 110% of the time, which doesn't seem right to me. But I understand that that's the drive and that's the job. So hopefully you have a team that's able to still get stuff done while you're out there fundraising. Only advice would be to try to get quick answers, try to get to a yes or no quickly. And okay, yes quickly might not happen, but at least get to a no quickly. That being said, be persistent. So it's a balancing act. But I've seen companies that we tend to, angel groups are great, but they're slow. And I've seen companies get dragged for months and months and months and months and months, presenting and pitching and refining, and that's great, but it could be a waste of their time. And in my opinion, sometimes it is. Again, be persistent, but if you can get to a no quickly and move on, you can cover more ground, because it is something you have to do full time.
Yeah. And I'd add that you don't want to sit there and think 30 days before you run out of cash, we're going to start fundraising. That's the wrong time to think about it. It's really a multi-month thought. So it's, from the time you start into the time that wires money, it's not going to be any faster than 3 months. So you got to start thinking in it and planning ahead by that. The other thing is that understand what stage you're in too. Are you angel pre-seed, or are you more seed Series A? Because those are different types of metrics those VCs needs to see to make a decision on that. And so, understanding what stage you're in, and then making sure you work months in advance to make sure you're building up those metrics to make that higher probability of you being able to go and get investments and the amount that you want. So, the other thing is that I would say you got to be expecting to see anywhere from 20 to 40 individual investors, and that could be angel all the way to professional investors, and it takes. Take the time up front to do some research on those investors to find out what their propensities are of what they've invested in the past and what they might be interested in. Let's not waste their time or your time pitching somebody that has never done a B2C company and they don't really like it because they're hardcore B2B. No use wasting your time with that. So that's just another thing I'd add on to that. And last question, and then while you're answering, I'm going to start getting the projector ready. But we have companies pitching tonight, but also companies are going to be pitching in the future. And many times you have as short as 30 seconds with an investor at an event like this, or you have maybe 5 minutes where you're able to get a slide deck in front of somebody. What are some of the things you guys need to see in like a 5-minute pitch like this? That they need to put in their pitch tonight to be able to get maybe a sit-down meeting, because that's at the end of the goal. I think that sit-down meeting is where you want to be able to get to with yourself, your other partners in the room, to be able to go through the whole deck, maybe have 45 minutes. So, what are some of the things?
I'm not sure there's a perfect answer for that. It's so fluid. Some of the stuff we touched on for me, it's all about the founder. It really is. The idea is so secondary. In my mind, it has to be a good idea, but it really comes down to, can you present it? Can you articulate it? Can you have a vision for it? How dedicated are you? Do I get a sense that you are going to persevere through this? Do you have the domain knowledge? Have you, again, I told you what I'm a sucker for, but also, in the details. Do you know that Salesforce acquired 16 companies last year in this market segment for this valuation? And therefore investors can expect a return of this. Don't forget to get to those details, the numbers, because as investors we look for what's the ask. A lot of times you'll see a pitch and there's never the ask. We're not raising money now. Well, why are you here? And I don't mean to be dismissive, because it's a good practice, but as investors we're looking at the numbers all the time, whether explicitly or implicitly. So show us what you know in terms of the ask, the valuation, why it is that way, what your revenue is, that kind of stuff. It's hard. There's no right answer, but those are some of the things that come to my mind.
Yeah, thank you. I picked this up. There's no correct answer, in particular not for the 5 minutes. Of course, we could now say, and you have to have this and that and that and that, and then the 5 minutes are not enough. So that means you have to make a choice. What do I put into my 5 minutes? And what convinces me in most of the cases is a kind of a gut feeling about the person, the fit to the technology, and the idea that this could really take off. Somehow. Is that a gut feeling? Yes, there's a gut feeling. That gut feeling, usually gut feelings are built by experience. and then materialize somehow and densify themselves in a gut feeling. All the rest of the details will anyway be scrutinized in the due diligence. So, but you have to get there. So that means for me, it's always, I like this idea, and I personally do usually my investment decision exactly at that point in time. We have a nice tool at the Band of Angels, all the document, not that is in the Sentinel Angels, that tool, and all the documents are in that tool, and I can right away click committed and put the dollar number behind that, or I can put there, mark myself as interested, and then people later come on and ask me for the dollar amount, and that is usually when I make my investment decision. Very rarely I revoke this. Maybe if the due diligence later on figures this was far overstated, or there was a significant glitch in the competition analysis which I couldn't find or didn't know. But that is usually when I make my decision. Right away at the evening, boom, and then I put committed and put a number behind it, and I'm usually done.